I'm Osborne Foreman. In this video, I'm going to be analysing AstraZeneca stock by giving my thoughts on the business and whether I personally would buy shares of AZN right now. And if you find the video useful, please drop one of these to support the channel. Before we start, this is a very complex pharmaceutical business and I'm very far from being an expert on the industry, and typically this would be a company that I'd usually avoid as I have a lack of understanding. However, I'd like to give my best possible shot at understanding the possible investment thesis by looking at the fundamentals and also their business model as much as I can. AstraZeneca develops, manufactures and commercializes prescription medicines worldwide with a wide range of industries, going from oncology, which is the study of cancer, to cardiovascular, which is the heart and blood systems. You've also got renal, which is kidneys, you've got metabolism, respiratory, which is breathing, you've got infection, neuroscience, which is the brain and nervous system, and gastroenterology, which is the digestive system. AZN is listed in the FTSE 100, has 76,100 employees, and a market capitalisation of nearly £95 billion. I would consider AZN to be in an oligopolistic market structure in which this was created due to higher levels of regulation. This means that a few large companies dominate a majority of the market share, but individually they have limited marketing influence, except they can have competitive advantages against each other or build substantial moats, as they can have products in different niches that will take different consumer audiences, for example. Have a different target market. I would also consider AstraZeneca to be in a fragmented competitor landscape, as they have over 30 different products in different niches. This in turn makes it more difficult to track market shares against the business, and if you were to, for instance, Google or look into the market shares, typically the big pharmaceutical companies will be compared by their amount of revenue, as they are all competing in different niches but have some overlaps and compete with specific products, for example. Regardless, I would consider AstraZeneca's closest competitor to be Amgen, which I don't believe I have pronounced correctly, as they are both innovation-driven companies and discovering new medicines could certainly provide further revenue streams, although their target markets are different, with AstraZeneca focusing on healthcare specialists and the likes of Amgen focusing on people with critical illnesses that are on the rarer side of things. But then again, I'm not well versed in this sector, and my limited knowledge could very much mean that AstraZeneca have much closer competitors, but from the research I've done, this seems to be the closest one that I can personally find. However, feel free to leave a comment below, as your comments, there's likely people here that have worked in the industry and have much more levels of knowledge, and so all the additional information that you can provide down below would be much appreciated for anyone else watching this video and interested in buying AstraZeneca. AstraZeneca has 171 different projects in their pipeline, with 10 new molecular entities in their late stage pipeline, meaning it's more likely that they will get passed through and be used for as an actual medicine purpose. They also have one entity that is new to phase 3 testing, once more a more promising thing to see. Although, on the other hand, 13 projects have been removed, and that was in the last quarter, which could suggest that there are quite a high number of dismissals in terms of their medicine, meaning that regulations are obviously tight, but could mean that there's a high rate of failure with these pipeline projects. Then again, I think this is very much understandable. As I've mentioned before, the high regulations in place for clinical testing means that it is very unlikely to have a successful product. I'm going to leave a link at the bottom of the description down below, and this will take you to AstraZeneca's website showing you their entire pipeline, as this will be able to provide you far more information than I'll ever be able to provide, because I lack that industry insight or knowledge, meaning that I couldn't tell you which of these specific products or items in the pipeline that will actually be or have a lot of hope for the future and the growth of the company. In the last 5 years, AstraZeneca has managed to grow their earnings by a compound annual growth rate of negative 7.7%, although their earnings have been at a high since 2017. As we can see on the chart, earnings had started to decrease after 2017 and bottomed out around 2018-2019, and in the last year and a half, they have certainly recovered quite a far amount. But then again, they've also had a large one-off gain of 977 million, suggesting that that is impacting their 2020 results. And through speculation, we could say this could be due to the pandemic vaccine, or perhaps short-term expenses that have been cut. But then again, this is my personal speculation, and I've not dived deeper into it. We can also see that their revenue has been pretty stagnant and remained relatively flat over a 5 to 6 year period, although in the middle of it we can see that revenue had decreased and then once again recovered, suggesting that they are reversing a negative earnings trend and looking more promising for the future. When looking at their balance sheet, we can see that their short-term assets do not outweigh their short-term liabilities or long-term liabilities. This is combined with a debt-to-equity ratio of 140.9%, but they do have $8 billion of cash on the balance sheet. But then again, this $8 billion in cash only takes up slightly over 1/3 of the overall debt, and that certainly is a much more worrying figure, suggesting to me that they do have a poorer quality balance sheet, but then at their size and scale, it's more expected, and usually these companies have higher leverage, and due to their high level of earnings, in which they are maintaining around a 12% profit margin and their cash flow maintaining around a similar amount, they could reasonably pay this off over the period of their continued growth. AstraZeneca has a dividend yield of 2.76% and pays biannually, typically paying in March and September each year. Although their dividend yield is on the lower side, I would consider it to be of a lower risk. And this is because in the last 20 years, their dividend history, they've managed to pay a dividend each and every year. Although in the last 9 years, they've not grown their dividend at all. Furthermore, their compound annual growth rate of their dividend in the last 10 years is obviously going to be low of 0.94%, which obviously suggests that they haven't grown it much and may be more unlikely to in the future. But we can draw a trend from this, and that in times of uncertainty, you're very likely to be receiving that consistent dividend payment, and that could be a promising thing if you rely on living off your dividend income or in retirement, for example. Although I do find this understandable as to why they have not grown their dividend, as their earnings have remained stagnant and they have actually been over their payout ratio, because their payout ratio is 114.9%. This means that more than 100% of their overall earnings are being paid as a dividend, which means they are drawing down upon their cash on the balance sheet. It's fine for the time being, as they have a lot of cash on the balance sheet, but sustainably over the longer term, unless their earnings increase or their dividend is cut, then it's unlikely they will be able to pay a dividend at this specific level, or even give any dividend growth, as they have no more money to increase this dividend amount. Of course, that $8 billion in cash is very likely to keep them paying a dividend, so shareholders can continue to be rewarded. If you had bought shares of AZN or AstraZeneca in the last 5 years, you would have gotten returns of 106.2%, and that does outperform the industry and market with dividends reinvested. Although I suspect the UK industry is likely being dragged down by the likes of GSK, and I'm not sure how my software Simply Wall Street evaluates this, but it may be weighted towards the larger companies, at which point GSK would be dragging this number down. And if you sign up to Freetrade, which is my stockbroker, you can get a free share when you deposit funds into the account. And if you'd like to do that, please click the link in the description down below. Judging by the valuation on their price to earnings, it does seem like investors are not too more bullish on the likes of AstraZeneca compared to the industry, but then the price to book ratio, or their net assets compared to their market capitalization, would suggest otherwise, and that they are more bullish on it. But then again, that price to book ratio is likely higher due to their higher levels of debt. I personally think that AstraZeneca is a stock that could fit in any portfolio, as they are well diversified within the pharmaceutical niche and pay a reliable dividend that will likely be paying in times of economic uncertainty, like the Great Financial Crisis in 2007, the dot-com bubble in 2001, and also the pandemic crisis in 2020. Although the complexities of their business model could make it more difficult for investors to understand without having previous experience, for instance, line of work in the industry. This could mean that this stock becomes difficult to value by retail investors. And whilst it's very likely that most institutions hold this stock, we can certainly mean that, or infer from this, that AstraZeneca may not be fairly valued at certain points. And that's understandable in the stock market, as nothing is truly fairly valued, but for extended periods of time, this stock could be undervalued or overvalued. And it really takes that extra level of conviction or knowledge or research into the business to really know whether to buy or sell the dip, meaning it's advantageous for those with greater understanding because they'll be able to know when it's undervalued and buy more. But for those that don't really understand this niche, they may see that this stock is continuing to drop and therefore may believe that they should sell, for example, when it may not be in their best decision. I personally believe that my knowledge in the sector is very limited, and therefore I refuse to let myself buy stocks in a niche that I personally do not understand. I'm aware that an investor could certainly self-study on the topic and therefore become more knowledgeable on the investment and therefore hold it in their portfolios. But I believe that the time required to get a comfortable level of understanding, which I personally believe I would like a lot of information on the business, is going to take or outweigh the value of just finding a stock in a niche that I prefer and will be less likely to burn out researching or more easily be able to comprehend. This may mean that I'm lacking healthcare/pharmaceutical diversification in my portfolio, but at the same time, if I wanted that diversification, I could really just buy a healthcare or pharmaceutical exchange traded fund or ETF. However, for the time being, I've had success in avoiding this sector, not because this sector has outperformed or overperformed for any reason, but rather because it's not in my understanding and I've invested elsewhere and those stocks have done modestly well. But I do completely understand if you were interested in buying this stock, but I personally will not be doing so. If you're interested in my GSK stock analysis, then click the card at the top right of the video. Thank you for watching. Have a great day.